Yeah, hello friends. Welcome back to our channel again. So today we are going to have a look at an option adjustments for beginners. Okay. So if you are starting to do an option trading as an initial phase, okay, so this video might be helpful for you to do an adjustments when and where necessary. Okay. So let's talk about an introduction, like why we need an adjustments and what is the use of that everything. Okay. So option adjustment is nothing but it is like steering for the car, which will use to avoid hitting any roadblocks and stay on the right track. Okay. So the purpose of that steering is same as for the option adjustments. Okay. So the goal is to tune the trade to right to stay in the right direction, which is towards the profit. Okay. So we are entering into one trade to make some profit, so to stay in the profit or to move towards the profit, what we have to do is which is our destination. So same like where we are tilting our steering, right? Same like we need to do some tweaks to our option trade so that we'll be going to stay in the profit or we'll be going to come out without any losses. Okay, so for that purpose, we need an option adjustments. Okay, so why option adjustment is needed? Adjustments is going to help us to get a potential profit. Okay, so wherever we are, our position is into one loss, which we are going to turn into an opportunities into one profit or limiting the loss whenever the things doesn't happen as we planned for into the particular trade. Okay, so doing a small tweak to our existing trade will turn our position from loss into one profit. Okay, so what we are going to do is we are going to just tweak some existing positions with the new options so that our positions will be going to move from loss into one profit if the trade doesn't work as we expect. Okay, so the reason for adjustment is to avoid the price movement which is moving beyond our strike prices. Just for an example, if we have sold a call option at the higher price, but the stock prices keep on moving upside, which is going to move beyond our sold strike price, or if the market is we have entered it one sold put option and market is keep on moving downside where it is going to move beyond our sold strike put option strike, then in that place we'll be going to do some adjustment. Okay, and the second point is to protect our profit. Okay, so if we have some profit in our entered position and we don't want to lose that and we want to stay in the position, so for that purpose we'll be going to make some tweak to our option position so that we are going to protect our profit. Okay, and the third point is if the market condition getting changed due to that global crisis, just for an example, is there any war or due to any weather climate changes or any election results, in that cases market condition will change suddenly. So if that market condition is going against us, then we'll be going to do some option adjustments to stay in the trade. Okay, so easy adjustment for beginners are I'm covering the 4 parts here. Okay, so one is rolling the trade, the other one is adding a hedge, third one is reducing position size, and fourth one is converting into a spread. Okay, so if you talk about the first point, which is rolling the trade, which is nothing but we'll be rolling up or down our strike price. Okay, based on the price movement. Just for an example, if you are holding an call option, okay, and if the market is going down, what we are going to do is we'll be going to roll down our sold call option to the lower strike prices to protect the profit, whatever we got. Same like in the put option, if you have sold a put option and if the market is keep on moving up, which will be in our favor, what we are going to do is we'll be rolling our put option on the up for the higher strike prices so that we'll be going to stay in the position, and also we are going to get some more profit and we are locking our existing profit as well. Okay, and other than that, rolling the trade, what you're going to do is we'll be going to roll our trade into a 4 month away expiry. Okay, so just for an example, if you're into an current month expiry, you have sold a call option for the current month, but market is moving against you. And if you want to stay in the trade, a simple option is close the current month trade and enter in the same strike price with the next month expiry. Okay, so by doing this rollout, what we are going to do is we are going to get some more time to stay in the trade so that if market have a small reversal which is going to benefit our trade. Okay, so the first strategy is rolling the trade and the second one is adding a hedge. Adding a hedge is nothing but buying a call or put option to protect our trade. Just for an example, if you have entered and sold short call option, what we are going to do is we are going to buy a call option on the higher side so that if the market is going to move against us, that bought call option will be going to save us. Same like if you are going to enter into a short put, what you have to do is we have to buy one put option on the lower side beyond our sold put option, so that it is going to act as a hedge. Okay. So when we have two hedges, like using this method, we are uh, going to hedge our position whenever we think that market is more volatile and it is a bit hard to predict the direction. Okay, so if we feel that it is hard to predict the direction, then it is better to do an hedge for our existing sold options or call options. And the third point is reducing the position size. Okay, so simply nothing but, just for an example, if you're holding in 10 lots and if the trade is going against us, or if the trade is going in favor of us, whatever happens, after a certain period of time, what we can do is we can reduce the position size. Instead of holding in 10 position, we can close 5 existing position and hold only the 5 balance 5 position, so that if you are in the profit, we have blocked 50% of the profit in that particular trade, and we are going to risk only 50%, so that if the loss happens, we have blocked some profit already, so we can come out of the trade easily without any losses. And if the trade is going to make loss as well, what we can do is we can reduce the position to half of the size, so that we are going to reduce our risk whatever we are holding it. So then fourth point is converting to a spread. Okay, so converting to a spread is nothing but, let's take an example that we are having a naked call option. Okay, so what we can do is, for that naked call option, we can convert it into a spread options. Okay, so simply we can buy a call option on the lower side or a call option on the higher side, so that we'll be converting our naked leg into an spreads. Okay, either it can be credit spread or debit spread, whatever you wish to, you can convert our naked positions into a spread. So these are the four basic adjustments. Okay, and there are few mistakes which needs to be avoided. Okay, so if you are a beginner, just don't do frequent adjustments. Okay, so let's give some time to the trade, so that let it to play itself. Okay, so doing this too many frequent adjustments will mess up our trade. Okay, so that we are going to complicate our trades with too many adjustments, so we should avoid that. And also we should take in mind that whatever the adjustments we are doing, we have some cost for that particular adjustment as well. Okay, so a few beginners used to do lot many adjustments and they avoid or ignore the transaction cost. Okay, so each adjustments will comes with the cost which we need to pay. That will be in brokerage, that will be some tax, whatever is implied for that particular legs which we are going to do an adjustments. Okay, so the summary for this is, make sure to do the adjustment in a simple and purposeful thing. So do the adjustments only whenever necessary, and don't do the adjustments uh, to make the positions into one too complicated way. Okay, and always start small. Okay, so if you have a price or margin for a 10 lots, never go with a 10 lots of trading. Instead, just do with a minimal uh, lots, just for an example 2 or 3 lots. And then once you're getting too much of handful hands-ons, once you get a good hands-on, then you can enter into an multiple lot trades. Okay, or else if you are still not having much confidence into this multiple adjustments, you can just simply do the paper trading and find out how your trade goes, how your emotions are getting mitigated with this particular trades. So based on that, you can do a real trading. Okay, so this is about the option adjustments for beginners. And if you guys want to follow us on the social media, so these are the multiple social media handles we have. You can follow us on the Twitter, YouTube channel, which is Let's Learn Trading, and blog, which is blog.letslearntrading, where you can find out a good number of existing trades or strategies which you have taken so far. And if you want to attend our option adjustment tradings, which will be for intermediate to expert level, if you are not a beginner and if you know the basics of options, and if you want to learn what are the list of strategies or adjustments which you want to take for the real-time trades, you can visit our website letslearntrading.com, and you can find out the list of strategies which we provide on the weekly basis for our webinar. Okay, so and if you want to connect with us, you can just WhatsApp me at 73052262224 at any time. Okay, I'm happy to help you guys. Okay, And we are planning for the webinar on coming 24th November. Okay, so if you want to join us, you can just visit my website and you can just WhatsApp me and you can join in the for the coming webinars as well. Okay, so thanks everyone for watching and happy trading by Let's Learn Trading. Thank you.